Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 2nd, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into our description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also see which stocks are giving you overbought and oversold cluster signals at the bottom of those emails. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me. My handle is at Brandon Van Zee, and we really appreciate those of you who are willing to click like and retweet on those posts. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And just to kick things off so we're aware expectation-wise as far as how long we'll be in this presentation tonight, this will be another abbreviated session, 15 minutes for us here tonight. Last time I did the video, looks like our like count got up to 91, but we need that up in the triple digits. So we've been missing it the last couple of times. Maybe, just maybe, we'll get an opportunity to correct that situation by the time I do the video again on Tuesday. But in the end, maybe you prefer these 15-minute videos. And if that's the case, then continue as is. And everything will work out just fine there as well. Let's go ahead and take a look here at another post that I put on our website. This is the dividend growth investing increases. These are the stocks that had previously at least 5 years in a row of dividend increases that increased their dividend again in the month of October. So this is typically a monthly post. Remember, this is available for free. You do not have to be a premium member of Market Scholars to access this on our website. You can find it at MarketScholars.com. Hover your mouse over the blog post area and then click on dividend growth investing. I'll also do my best to put a link to this post in the email that I send you in tonight's email about the Market Outlook video. And then let's get over here to our heat map. And my, oh my, what a day it was. Markets were just rip-roaring higher. Isn't it amazing? This is now the fourth straight day to the upside for the S&P 500. And you'll recall it was exactly 1 week ago on Thursday when we spent some time in my video discussing the very first oversold cluster signal for the S&P 500 in over a year. We did get a second straight cluster on Friday, and I'm sure David probably talked to you about that in his weekend video as well. So last Thursday and Friday, we got our first oversold cluster signals on the S&P 500. Coming into this week when we would expect a reversion to the mean type of a move, boy, oh boy, did we get it. This is exactly what you want to see. 4 straight days to the upside and, ending kind of today with a bang. I mean, today was one of the biggest days we've had in several months, up nearly 2% across the board. And this was not just a market cap weighted rally like we've seen with some of the Magnificent Seven companies in the past. Today, once again, we had the equal weighted S&P 500 outperforming the typical S&P 500, continuing that theme that I shared with you 1 week ago when I told you to keep your eye on those ratio charts because I had noticed some pivots and some changes underneath the surface, and that has continued throughout this week, and that's a sign of health from my perspective within the market itself because we're getting much broader participation here. Our breadth numbers have been outstanding. So be aware as well, we're not going to be able to get into much in the way of after-hours movers since this will be an abbreviated 15-minute session as opposed to the hour-long ones I do once you get me up to 100 likes. But I did want to at least mention that Apple did report their earnings after hours here today, and their stock is falling. It's down about $6 per share, which was actually pretty much spot on the market maker move expectations. Whether we were going to go up or down, we didn't know, but judging by the options pricing, it appeared to be pricing in about a $6 move, and that's exactly where we're at right now. Apple closed the session at 177. It's currently trading in the after-hour session at 171 upon apparently somewhat of a moderate view towards future earnings growth. So be aware that there might be a little bit of pressure on the market as we head into tomorrow morning session. The other thing to be aware of with tomorrow, since it's the first Friday of the new month, we do have our jobs number tomorrow as well. So there is some potential for volatility tomorrow. Make sure you're buckled in and ready to go. But at least for today, things looked absolutely wonderful. take a look at all that green out there. I mean, it's amazing. All over the place. We barely have any red. I mean, in fact, we should probably start with the red since it's a little bit easier to point out the rare red patches that are out there. Airbnb was down about 3% today. Rockwell Automation was down about 3% today. Moderna had a tough day, up down about 6.5% there. Let's see, we had EG, which is Everest Group. They actually changed their ticker symbol here recently to EG. Anyway, it was down about 5%. A couple of the other insurance companies, Progressive, Chubb, Cincinnati Financial, all closing in the red here today. Let's see, we had Meta from a Magnificent Seven perspective close in the red, but I believe they were the only one from that perspective. With our others in the Magnificent Seven, you can see here, Google was up about 1%, Nvidia was up 2.8%, Microsoft was up almost 1%. Apple in the normal session was up 2%. And again, that looks to be eliminated in the after hours session if these drops in the after hours will hold until tomorrow. So brace yourself on that one. Amazon closed higher by nearly 1%. And then Tesla was up about 6% there. So a bit of hit and miss. We had Tesla was the biggest by far, but a lot of those other Magnificent Seven names that I rattled off there were just kind of average movers, not even average, I should say. And that's kind of the point of what I had mentioned before, that the equal weighted market, or the equal weighted S&P 500 outperformed the market cap weighted, meaning that today was not one of those days that was carried by the Magnificent Seven. It was carried by the remainder of the 493 other companies that were out there on average. I should also point out that Eli Lilly had a heck of a day. Of course, a stock that we've been trend trading for over a year at this point and continues to surprise and delight us in our Monday top-down trend trading class, up another 4.6% today. Of course, the story there remains the weight loss drugs. By the way, while you don't see it here because Novo Nordisk is not in the S&P 500 as a European company, it was also up nicely today, over 3% on the weight loss drug phenomenon. Other big movers, you can see Exxon and Chevron came snapping back today. Oil's been under a little bit more pressure this week compared to some of the other sectors, but today they did their best to hold up nicely, up 3% each. We also saw some very nice dividend increase announcements. I feel like I've been very busy on Twitter here recently with all of the dividend increase announcements that I've been kind of distributing out there. And I know one of them today was on Conoco, and I think they raised their dividend by 14%. Their share price was up 4.5% today. And then EOG Resources, I believe they raised their dividend by about 10%. They were up about 3.5% in price today. So seems like we've got some gushers there in terms of dividend growth within the oil patch. You can see that Starbucks had a remarkable day. It's a company that we have covered a couple of times this semester in our dividend growth investing class. And today it really impressed investors to the upside, up nearly 10%, one of the best performers in the entire S&P 500. And by the way, it's red cup season. The holiday cups are in, the peppermint mochas are flowing, and hopefully folks will be spending their money there, at least hopefully as a shareholder. Home Depot also made a nice move here today, up nearly 3% for the big box home improvement company. The banks were rolling nicely today. Take a look at Bank of America, up 4.6%. Outstanding there. Johnson & Johnson was up over 1%. Procter & Gamble was up over 1%. Coca-Cola and Pepsi both up over 1%. So some of those well-known, well-regarded dividend aristocrats pulling their weight here today as well. Adobe had a very nice move. It was up 2.6% today. Remember, we have a bullish trade going on Adobe right now. I believe it was a bull put spread. And so today certainly helped our prospects with that trade. Speaking of which, I was going to remind you that when we look at our charts here, we've now had 3 out of the last 4 days with more than a 1% advance higher, and how different that has felt compared to most of these bars that were stretching lower in the red below this blue 1% line here. And remember, a lot of those days were days when I was up and over 100 likes, and so I was doing trade application examples for you guys, and we did a lot of selling of puts on those particular days. There were at least 4 of them recently that I recall that are still open on our books, and that includes American Tower that we did just last week. We did also Honeywell, we did Target, and we did T. Rowe Price. Guess what? We're making money on all 4 of those trades because we were brave enough to sell puts on days when the market was throwing them away during this period during the fall. So that way we were prepared to have this massive rally here in the market with 3 out of 4 days to the upside. So I think our trade applications are positioned fairly nicely. We do have more bullish trades than bearish ones, and that was a wise decision. At least it appears to be the case so far this week. Of course, things can change, and if they do, we'll certainly let you know, but you got to love the enthusiasm in the market in the last 4 days after we had that oversold cluster signal. Notice that the VIX did fall down to 16. Remember, just last week we were talking about how the VIX was up there at 21. That is a huge drop right there in the VIX. Let's talk real quick about our market breadth numbers. 448 stocks out of the S&P 500 closed in the green today, so that was good for about a 90% hit rate. So this was a broad-based rally for certain. Back over here to this chart, I also wanted to point out that this is what the 1 day looks like here. Here's what the 1 week looks like. Notice all that green, and we are talking about some epic moves higher with a lot of these stocks after we got that oversold cluster signal exactly 1 week ago. Amazon's up 15% in that time period, right? So if you hear David and I talking about how rare it is for the S&P 500 or another index to give you an oversold cluster signal, like I had mentioned 1 week ago, just tuck that away as a nugget of information in the back of your mind that might be a time to be brave and do something on the other side of the market, in this case meaning buying some stocks that you feel confident in. Many of these moves in just 1 week are enough to make and break you for your full year in some cases, right? Amazon up 15% and Intel up 16%, and there's a lot of them. I'm not going to point out all of them, but the point is this has been a really, really nice week here immediately after those oversold cluster signals that were identified specifically because of the market forecast technical indicator. Speaking of which, let's now go on over there to the market forecast technical indicator and see where things stand now after today's immense rally. So let's pull up chart 4B. And you can see here that today was an impactful day. Notice we are now back to our weekly bullish posture on the S&P 500. Not only that, but we didn't even stutter at the moving average itself. We sliced straight through it like a hot knife through butter. We did not hesitate. That's what you want to see. And of course, we've talked about the seasonality, how yesterday started the best 3 months of the stock market traditionally. November, December, January typically represents the best 3-month period, in addition to, as I mentioned here a couple of times already, but in case you didn't catch my presentation last week, here was last week's candle on Thursday when I was with you. We had that very first oversold cluster signal, and then on Friday it followed up with one more, so we had back-to-back clusters, and then boom, rocket ship. That's the way you want to see it work out, right? Sometimes it just kind of fizzles, it meanders. This is a very impactful move that we saw right here. And again, I want to stress the breadth was awesome today. 90% of stocks closing in the green. Here's what RSP looks like. Remember, this is your equal weighted version. It was up 2.22% today, right? Kind of circling that up here. I know it's hard to read, but it's 2.22% on RSP. Back to S&P 500, it's only 1.89%. So again, recognizing that the smaller players within the market more than pulled their weight today, which is a different feeling than we've had about this market for quite some time. So to put a ribbon on it, you can see S&P 500 was up 1.89% today. Dow Jones Industrial Average was up 1.70% today. The NASDAQ Composite was up 1.78% today. And the Russell 2000, my oh my, and we've been waiting for some sort of a snapback. This was a pretty big one, up 2.67% today. A lot of this, by the way, being driven by the stalling out of interest rates. Notice that TNX, which is the 10-year Treasury yield, fell once again and ended today at 4.66%. Remember, we were just talking about it about a week and a half ago when it was touching 5%. So we are down, a quarter of a percent, and that makes a big impact, especially on those interest rate sensitive areas of the market. So I think that has been a key catalyst for this market's recovery here this week. You'll notice that the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite are all trading with weekly bullish postures now. Russell 2000 remains with a strongly bearish one, but you can see that green line is nearly about to pop out of that lower reversal zone. It could easily happen tomorrow, depending upon how things are viewed with the jobs report. You can see that 3 of our charts are now trading above their 30-day moving averages, with the NASDAQ trading above its rising 30-day moving average, and the Russell 2000 is the only one that's still below its falling 30-day moving average. All right, my 15 minutes is up. If you want an hour-long presentation next time along, make sure you're taking the 5 seconds out of your day to click the free like button there on Twitter for us. Otherwise, I'll plan to see many of my premium members first thing Monday morning in top-down trend trading. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.